Um, so today's class is supposed to be on ranges, um, liquidity, and structure. So I'm going to take ranges and structure while one of my mentees will take um a class on liquidity. So he was part of the last PIP farmer class, and his name is Riley. So Riley is going to take care of liquidity because Riley understands liquidity. Now, um, I'll be here while he's taking it, but you get the point. I never really asked how he was even going to take the class on liquidity. Okay, let's just focus on the ones I meant to do first. Then Riley now would now take over shortly after. So the problem with the ranges class for other people was that I did not break it down in a way that everybody would actually understand. Okay, so I take fault for that. But then again, I believe if you went through the Pip Farmer one class that I gave you guys access to, that I'll soon restrict access to eventually. If you went through those things already, I'm guessing you'd have been ahead of whatever I'm about to say or teach now. Well, let's assume nobody here has gone through the classes. Let's just assume that for now. So, what are ranges? That's the big question. What are ranges? So, let me put it this way. Ranges are structural points in price or a detailed structural point in price we use in knowing like, okay, let me put it this way now. I'm looking for the best explanation for it. So it's like it's a detailed structure in price. It's just like how you have your um chart patterns, all those things. It's a detailed structure. Detailed. What makes it detailed is actually that it has a function in price, right? So its function is similar to that of your break of structure, change of character, but it categorizes all of them in one, right? So ranges is more of an example than a name. A range is not necessarily individual candles, but it is a collection of those candles acting on something. Now, what does this mean? In a range, we can see multiple breaks of structures, right? We can see multiple break of structures, but ranges are like the structural points according to a time frame that define all those break of structures. So ranges really depend on where you're looking at it from. A 5 minute range can, in fact, ranges is even what makes people say that price is fractal, right? Where 5 minute breaks of structures are all leading to 30 minutes break of structures. 30-minute break of structures are all leading to 4 hour break of structures. It's all price in price in price defined in one big thing. So to give you a big name, there's no need for that. Ranges is basically structure in itself. Ranges is basically structure, but in a more detailed manner. And the only way to explain those details is to show it by example and not by words, right? Because I'm not a mentor of names and all those things. If you've noticed, I don't really like. It's not that I know half the names of what people call all the things they call it, all the different liquidity types and all those things, but I don't use them even on my own charts because I don't believe in naming stuff. I just believe in ranges and structure. Now, there are two types of ranges. And those ranges, oh, you see all these things categorized, all these things here, ranges, liquidity, and structure, they're all categorized as the same thing, one way or the other. So, you know how we have something called, so I believe most of you should really have an idea of how liquidity works before Riley even teaches anything he wants to teach. But let's go with examples we have first. So there are two types of ranges. We have internal internal ranges or internal range liquidity, because ranges is also everything is liquidity, right? So liquidity and external range liquidities. Now, what do we call your external range liquidities? Examples of your external range liquidities basically would be range highs. Some people can call them old highs or structural highs. Let's just call them structural highs. And okay, let's say add or lows. Yeah. And what else can be an example of an external range? This is basically what range high is. And then an example for your internal range or internal range liquidity as things like inducements, FVGs, all of that. Now, before I continue, I don't think there's a point as to speaking forward. Is anybody catching up with what I said right now? Or is there something I need to go back to right now? If you caught up, say so, or type it rather, that you're catching up, rather than speaking differently on different things. I want to be sure that before I even start showing examples of it or diagrams of it, that we're at least catching up to something. Okay, everybody's catching up. I don't know why somebody's asking me for a recap. There's nothing wrong with recapping. This is like we do not have a class. What do you mean by recap? Do you mean recap of what I just said or recap of a previous class? This is basically a repetition of our last class that I'm doing right now. So I don't know what you mean by recap. Do you mean recap of what I've already said or recap of last class? There's no last class. I almost forgot one that, so I haven't forgotten. So an external ranges, yeah. Like I said, it's just like structure. What is structure? Structure basically is is trend. Oh, I'm typing in the wrong place. Um, okay, somebody says he wants a recap of what I said. So basically, hmm, ranges are a collection of um, prices, structural movements. Ranges, liquidity, and structure are all one concept together, but they are explained in a very different way. And the best way to understand ranges is how you view them, what you see, right? So ranges is actually a collection of things like break of structures, everything that makes up structure basically is a part of ranges. But ranges is identified slightly more differently. And that was what I was about to get into. So there are different types of ranges, the internal ranges and the external ranges. And what is inside the internal ranges is when you have things like internal range liquidity, that is like your inducement, draw, all those things that make pullbacks. Those pullbacks are what you call internal ranges, right? That's what price is driving for. They are all liquidities that price is driving for. So ranges is more like the term. It's more of the concept of the name itself. It's not necessarily a candle move per se. It's a whole concept on itself. It's like when somebody says trend lines. Trend line is like a concept. It does not mean that price is not moving. Price is moving. But when you draw this line, you've just done a concept. Without the drawing of this line, price has just been moving in an up and down move formation. But the moment he said a breakout had occurred here, he had created a concept. Same concept applies to something like ranges. Ranges is the act of that concept. It is the movement from that concept. So what do you do with a concept like this? You add it like it's like a confluence. You don't use it as it's just like trend line. If you just draw trend line, that's not your trade. Unless if that's all your trade is about. For something like me, I don't just draw trend line. Some people wait for breakout. Some people wait for retest. That's the trade. That's the setup. So ranges is not it's not the setup. It is the confluence for the setup, right? Don't mistake it for the whole concept. I mean, sorry, the whole setup or the whole entry or the whole entry type or the whole no. It is just a confluence you use to like aid what you already know or what you're trying to know. Range is basically a structure. It's like a subcategory of structure. It's like a category of structure that is only visible when it is shown. If somebody told you that a trend line was just you mark here and mark here, you don't understand what the person is saying till it has been shown what is occurring. And that's how ranges are. Now, let's try and move forward from this. Now, the best way to see ranges is you have to understand that ranges are, like I said in the beginning, the ranges are like series of breakup structures occurring at a time. Although there was something I wanted to say before this person talked about me doing a recap and it has slightly left me, but I know we're still on the same track. So now range. Now to identify this range, now we have to understand structure. And I think I was mentioning that structure is to understand ranges is as good as understanding structure. So what is in structure? What do we have in structure? So what is structure basically? Structure is basically the overall of price. Already, we already established that liquidity is what drives price, but structure is the overall of price. It is what is happening in price. It is not necessarily what is driving or what is pushing. It is what is. It is itself. It is like price in itself. When you say liquidity, you say that liquidity is what is pushing price from point A to point B, but structure is price itself. Where price, like liquidity is the future and the past of price, but structure is the present. Structure is what is, and range is like the wife to structure that says this is what has happened, right? You could be looking at these tiny candles individually, and that could count as structure. But ranges is what commands every break of structure. We have 10 break of structures, it doesn't matter, it's one range. We have one change of character. Okay, from here, this is where the new range starts. So we'll now get into that. So basically, what do we have in structure? We have trend in structure. We have breaks in structure. We have um market shifts in structure. We have what else do we have in structure? Most of you should already know this is before now. But I think you are all getting we're all getting where I'm coming from. We have stuff like breaker block and structure. We have everything that makes up structure, basically. We have stuff like FVGs in structure. Every single thing that makes up structure. All these things are like the overall, but range is like well, I say the 2G version. So to now really put it into play, let's identify ranges from at least this higher time frame here. So let me clean this shit out. So if you're catching up, please identify that you're catching up. If you're not catching up, identify what is making you not catch up. And if it's a personal issue, that means you might have to go through the video again on your own. If every other person is catching up and you're not catching up, then you might have to like go through the video again, or at least go through the farming pips one video, right? I think it might be easier if it's that this one isn't that easy for you. So now to continue. Now, I don't really like this structure here. That's why I never use GU. I want to use this one here, but I want to pre-identify the range. So, okay, let's be real here. So this is like the higher time frame external range here. This big break of structure that's here. It's like the higher time frame external range. Now, where do we start counting this range from? We can start counting this range from here, as this is the low and this is the high of that higher time frame external range. We can count it again here. Now, this is one break of structure. This was the low that started that break of structure. So one low, high. Now, you can see that there's no full retracement here. So this is where that high happened, ended. Now, what does this tell us? What this means, or what this thing I tried illustrating meant to us is that there's no range if there's no full retracement, right? Although if we were on a lower time frame like 15 minutes, we might have seen these zones as a better range. As I said, range is really depends on the time frame you're viewing it from. But for me, what makes a proper range? Let's type out what makes a proper range. Sweep, break of structure, um, fib retracement. So I told you guys to do an assignment on Fibonacci retracement, fib retracement, sweep. When I say sweep, I'm referring to liquidity sweep, where liquidity comes back, grab some liquidity, and then continues. And I would also say failed ranges counters is what makes up a strong range. We're talking about typing out what makes up a proper range. So failed ranges after being taken out. So when price comes and takes out a failed range, that price that does that thing, that act of taking out the failed range is a strong range. So this is what makes up a things that make up a strong range. Okay. So I think we're onto something. So what's happening here? So we can see here, we can identify easily a sweep here. I just want us to start from here in moving forward. So we can see a sweep here or a liquidity grab here. We had movement to the upside here, break of structure. Now after that break of structure, we did not get, see the 50% here, this red line of our FIB 2. Now, we did not get a retracement to the 50%. This second high did not do it. This third high did not do it. This fourth high here did not do it. See the 50%. See where the retracement ended. And then this fifth high, finally, we got that retracement we're looking for. But what has this now done for us? So it now helps us now identify that this is the low of this range and this is the high. Now we'll be marking these ranges with something else. We're marking it with this tool here. So I want us to move fast into into that zone I already did my replay tool for this zone, so we can mark out better ranges from a lower time frame perspective. Now, a range, I feel like it's only necessary when doing your top-down analysis to mark out your range once. My point here is that we do not need to do any top-down for this zone anymore. So every range we need to focus on now is on the 1 hour, 30 minutes, so that we can be catching more entries moving forward. But this is us using this as a study case, right? Now we have a full retracement here. So this is now a new range, being a full retracement. Now, this range does not fully count until it breaks this high. If they came to this point and said reversing and then took out this low, it is still not a range. In fact, it is that new low that becomes our new low of the range. And if it pushes up further, we now have a new high. So everything that happened inside here would have counted as a consolidation. So what do we have? Range low here, range high here, range low here. I see the break of structure, range high here. Now, typically, what do we expect or what do we sort to look for? Now, what we're looking for here, as usual, after the break of structure, is a proper retracement. And where should this retracement fall under? At least the 50%. Now, this is the low here, and this is the high here. Now, 50% commonly is here. This is the 61%. So anything that falls under this 50% now is our POI of interest, our point of interest, our order block, whatever. We just need a reaction coming from anything under here for us to be able to buy. Now, from now to that time, most of the time we might not be able to wait. Now, let's now move slightly outside of ranges. Let's look at the structure. So structure based on the time is a series of patterns. So what has occurred here? We have strong break of structure to the upside, a minor retracement reacting off of this other block here, another break of structure to the upside, but then we start to see failure here. We can see a failure reaction on this top here. You can see this failure reaction on this top here. You see how all the candles here were trying to close above this zone, but it would have found it very hard to. But that is not exactly what we're here to teach. We can teach that in our next class, right? The different ways of prices, reversals, and all of that. Yeah, the topic on that is should be XAU tips and all. So Now, that is things that work for me when I'm trading, right? So that's why we now talk about things like this trend line breakout and all of that and how I use mine. I don't use it the same way every other person uses theirs, but anything that works for you. Now, what are we looking for now? So we can see clearly that there's a major sell-off occurring here. Now, the point I'm trying to make is that there was no good retracement in after this break of high. So there's a very high chance that this low will not hold up this zone, right? So now what do we now start looking for? Looking for reactions. So if we can get a reaction from here, let's go to 1 hour so I can see clearly. So now we're done with the basic introduction or examples that I wanted to point out on the range. So now let's see how many times we could see. As we are now seeing more ranges here, we might not have better explanations for them. So I kind of like this structure. I don't know. Let me calm down because it's so I have a doji here. So let's just level it up for now. So only thing I'm doing now is just marking out all the breakup structures, nothing serious. Just looking for breakup structures and trying to see how many times we had the proper retracement on this tinier range. Now, in the overall range, you can already identify that we need a good retracement to at least this zone, right? And this looks like a POY zone here. Now, the high that they created here now, this thing is liquidity. See this whole structure here is liquidity because there was no proper pullback before this run to the upside. I think my network has issues. I don't know if anybody can hear me. Now, there was no proper pullback before this run to the upside. So what I've learned from all of this is that let me just mark it up like this. So let's just say we have normal price action to the upside like this. We're having normal price action. Then all of a sudden we have price action like this. Most of the time, price will come back and read all this because they are expecting people to come and be looking for entries in this zone and most likely to fail them. So what to do is something like this because it needs to continue that pattern. It needs to continue that pattern. So if you see something like this where they broke a major high and then they did a smaller move to the upside again, most of the time this thing here is liquidity, this low here. Now on lower time frame, this could look like a new range high, low. So we could level it as a new range low, right? Because of the time frame and so on. But the overall range here tells us that we need a good retracement. So what do we expect? We expect that from here, we start getting something like a change of character from this point here. So let's just keep our entry here. Not TP, sorry, okay. But it's on. So what zone is this? This is just a reclaimed block. If you don't know what reclaim block is, can study it. In fact, let me just explain it. Reclaim block basically just an order block that failed to get the reaction. So a good reclaim block for me is normally one that came after a pulsive move. So when we say a pulsive move like this and say a reclaim block, okay, normally we can call this a breaker block. It's kind of like a breaker block. You see, I feel like they're all the same thing actually. That's just the same thing. So if normally it was meant to hold, you'd see after the pulsive move, you see a reaction. But our class here is on ranges, not really other blocks right now. Not the other blocks should be for beginner classes. So now, what we're going to appreciate or do here, I'm going to start marking out the ranges occurring in this zone now. Now, let me now just put out something like let's spice it. So usually, yeah, I would say typically we should be waiting for a retracement back up. But let's be real here. We're not always going to get what we want from the market. That's what makes every time some people could have this forward or daily buyers and their entry somewhere here and price, especially on a pair like GU, will just keep on moving without them. Now let's just have that confluence class I wanted to have on XAU trading tips and everything. So let's just add something now. Let's not have the full thing, but let's just take something from it. So usually, yeah, we're seeing a trend breakout already. It's already happening. And for all we know, this could be the retest here, safe, right? The breakout has already occurred. We need to find the pair's strengths and weaknesses now. Now, rather than forcing it or waiting or hoping for it to come up here, the chances of this happening is there, but it's slim, especially after this trend breakout, because the market tries to give retailers opportunities to trade. So if a retail trader entered somewhere here or somewhere here, and also because we're SMC traders are waiting for, we're basically the same type of traders, but you get the point. We're specifically waiting for here, the chances of this happening is slim. So that's why as an SMC trader, you should be willing to take intraday trades like new day trades and all of that. Now, what are we now going to do moving forward? So this is one break of structure, two break of structure. So we can count this high now as our range. Now this double break of structure kind of gives this high more strength, right? So let's just see what we can achieve from it. So our third break of structure. Yeah. Let's use here as a liquidity point. And let's check 15 minutes instead for another block. So let's just use this guy here. Now, one other thing I would like to say is when you see a, okay, I think I used to have a name for that thing, but when you see, okay, let me draw it. Let me draw here. Ah, this class wants to end, so I'll have to send another link after when 10 minutes time though. So this is what it looks like. So we have something like um, this, this, and then we have something like this. Most of the time, if price cannot possibly move from this zone and start creating something similar again, what you'd see is price would come up, clear other liquidity there, and drop back, especially if that thing's reaction was not coming from a breaker. They would use that whole zone as a liquidity. And this thing I just drew is something I just remembered while seeing this zone. Now, I could use it for an example for something else later on. But let's see how this one holds up. If we skip, if this one skips us, just keep marking the breaks of structures. Okay, I'm supposed to even be marking out the ranges of RSF. So this is the range high, right? I don't think there's anything significant that's happened here that will make us now start marking a new range yet. So let's stick to that zone as the range high for the let's just take it as the hourly range, right? So we're still yet to mark another new range. So, um, change back to 30 minutes so I can see what I'm doing. Kind of like this or like this. This is why I don't like this pair. Too slow. And when it's now moving, it can now move without you. They don't even care. You know what I'm talking about. So they swap this high here. So we can mark this zone as a, what do you call it? A range high. So there's no full retracement here. So we expect them to clear this high soon. Take a minimum of this. I think I'll do better on 4 hours. So let's check 4 hours instead. Wow, 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 wow. Wow, 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 wow. So about the sell-offs from that zone. So why I don't even like trading some pairs like this is because when how will I put this? The way you trade gold and the way you trade some of these pairs are similar, but sometimes to be like more pro with one, you might have to just stick with that one you want to be pro with. Because if you keep on switching, it becomes slightly harder to do to really keep up, to really keep up. This zone kind of looks like they did want something like um, engineered liquidity on that zone. But to be sure, we have to be looking at 4 hour a bit. So it's either here or up here. We could get a good reaction from here, but to know how long it will last. So we get better reaction here. This one, good reaction here, but I expected a reaction here. So one, two, three only out of 4 or 5. Now, in a situation like this, where there's no inducement, we'd expect them to use this guy as inducement. Oh, I'm slowly moving away from our main topic. Sorry about that. So basically, we're trying to mark out all the range highs and lows so far, but I'm also using the opportunity to just go over a little thing before Riley takes the mic from me. So now I'm using this as the liquidity. So what type of liquidity is this? So this is your range high liquidity, right? So why is it like a range liquidity? So it's range liquidity. So why is it range liquidity? So here's the sense here. Here's our range high. Here's our range high. This is our range high. So why are we now taking here now? Well, what's making us now decide to take this zone? Well, if you look well, from the top to when they took out this inducement, we don't really have a solid, we don't really have a solid inducement here. There's no proper inducement here. Only thing we have here available from here to here is available liquidity at the top. So when price comes back, it kind of like, okay, let's just watch it. Because there's no good inducement there for me, Sha. Now you can see the range high has now moved because of this thing they did, has moved from this guy to this guy. This is no longer the range high. Now this one is a stronger range high. Why? He swept a previous range. And it's something similar to that thing I said about failed ranges, right? So a failed range to me should be a range that was unable to break a high or low. This one did its best, did everything it did. But because it wasn't pre-induced, it became the inducement. So this range high now has turned into range liquidity. They came back, cleared that range liquidity, and now they're aiming lower. Now, commonly, you can see this big FVG here. Unlike other zones, this is the only zone that has an FVG or imbalance. So somebody said they want to ask a question. Ask your question. Ask your question. So before we even ask if, what was I even saying? So okay, I was talking about the strength that this range now, this sweep that has occurred here, the sweep of this previous range, what it has created. Now, I not also explained why that sweep had to happen. This sweep had to happen because after this break of structure that occurred here, there was no pre-inducement available. You know, if an inducement wanted to create itself here, after they broke this structure to the downside here, they could have come up like this. Broken structure again, and then they'll come up again. And then that's what will now make a structure here hold. But they did not do that. Instead of doing that, they just fell and said, giving themselves release back up. Now, what even makes it worse is that there are stronger order blocks on this higher part here. I don't even know if that's the whole point. But yeah, I get the point. We need liquidity to drive, to move this market. So since there's no liquidity, there's no strong zone, the whole thing here now becomes liquidity. The people stop loss that will be here is liquidity. You understand? And then that could serve as an entry and an exit. So that's the continuation for this particular zone. But the person that has a question to ask should feel free to ask their question. You don't want to ask a question again? Like I said, that sweep of range, he used it to know it is, know it as a strong high, which should not be taken since it swept liquidity and broke structure, but you marked it as a liquidity point for the further push downward. Can you give the, I just said it now. That's what I just said. This thing that happened here, yeah, this is not a sweep. This was an FVG reaction. It's not a sweep. There's no sweep here. It looks like there's a sweep because of these small things here. But let's check it out. From this high here to this low that finally broke structure, we do not have good retracement here. So there's no strength here to this point here. This was the one time we now had a good retracement. So the retracement was really ongoing. Now, what did they do? They swept out all these minor liquidities. That is that example I gave you guys when I said that if you see that price is moving in a direction now, moving in a direction, and all of a sudden the time it's supposed to be using to retrace, it is consolidating or doing something stupid like this, most likely to come back or take out that liquidity and find the reaction zone and drop. And the reaction zone I used, for example, was breakout block. The reaction zone for this example here is FVG. So if you look well, let's put this in or let's change it to line charts And let's change the time frame to 1 hour. If we can look very well, we see that same thing happening here. So you can see low here. In fact, let's mark those low and highs. Aside this guy, is any other person understanding what? Did any other person? Is any other person understanding what I'm saying? Aside this person, it's like, is this the only person that misunderstands this particular thing? So this is the low, the high. I'm asking a question that needs answers. So the low, the high, the retracement that occurred. Another low now. Now, this is the ongoing retracement in that particular part. If any other person is not understanding, you say you're not understanding. If any other person is understanding, you say that you're understanding. And somebody's mic is still on. Magnitude as usual. Please turn off your mic. Zeus, turn off your mic. Is Riley even here? Riley is not here. Who are we there? Oh. Somebody said that they're not understanding, but they are following. So let me go over his question one more time. So he said the sweep. When you said the sweep, you're referring about this, you're talking about this first one, right? This original zone here, right? Zeus, okay, you not even mute yourself. Yeah, you say yes, this is the one you're talking about. That's the thing. There's no sweep here. Only thing that happened here is a retracement. The real sweep that happened was this one here. Do you understand? It's this one here. That is the sweep that you're looking for. Let me turn this thing back to candles so we can follow it. This is the low of the range, high, right? Of an ongoing lower time frame range. If I don't know if you guys understand. On the 4-hour time frame, these were the only available ranges, 1, 2, and this third one. But on the 1 hour or 30 minutes now, we can see that all these retracements here counts as a range. So we have range low, range high, range low. Now we're looking for the range high. The range high is trying to form itself. Now, why didn't it stop somewhere here? Why didn't it stop somewhere here? It's because all these zones here did not have a proper retracement. From year to year, no proper retracement. All the way to this last point, there was still no proper retracement. Now, the proper retracement started happening on this side. They started building this side liquidity you see ongoing here. Now, they got to the FVG on this zone that was on 4-hour and reacted off of it. That reaction now took out buy side liquidity. Is that part understood first? Is that part understood first? Zeus. Zeus and what's that person's name? Chimeze. Okay, so that part now is pretty straightforward, right? We've now had those major sell-offs now. It has happened. So this is like phase 1. Now phase 2. The drama here is in this point, if you really look well, so you understand why the same thing did not happen here. If you really look well, we have break of structure 1, retracement, break of structure 2, retracement, right? These retracements may not have gotten to the FIB2 retracement. That's why we have this bigger one. But here, there was no we don't even see 2 break of structures, just 1 pure sell, right? We did not even get sweep safe. We got nothing. Only thing that happened after was, let's just call it a rejection, right? This will look like a rejection on a daily time frame, but on the hourly, it doesn't look like that. So we're just seeing back candles, back up. So this is like a retracement. But the difference here is market needs liquidity to drive itself. Even from this point here, let me mark it. Even from this point here, there was no break and retracement. I don't know if you guys are following. This place now, this thing, see all this thing, all this here is gra. This high and this low are together. They're the same thing. This high and this low, they're together because there's no break, retrace, drop, break, all those things that make up a proper price action. It didn't happen. So when all these retracements started happening now, they were now looking for liquidity to drive them. So this high could not participate because it did not even do the bare minimum of breaking here and going up. It should have been a weak inducement, but it should have counted as something. It didn't do it. The low here did not break itself twice. Only thing that happened here was retracement. So during that retracement, they need liquidity. The best liquidity for them now was you thinking that your SL can be here because this place looks strong to you. It's not strong. This zone became an inducement to this POI. Then it came back up because there's no inducement. There's nothing to support the strength of this range. They weakened this zone and now strengthened here. Now the real strong high is this guy. That's why they were even able to do this thing they did here. They broke this low once, reacted from FVG and continued themselves because they now have a proper strong high. And as I said, the strongest ranges you okay, very clean that the strongest ranges you get are the ones that clear previous range liquidity or weak range liquidity, right? And a weak range liquidity would be Chamala is. I think I only see that example more on gold, but let me just draw it regardless. Let me try my best because this is kind of leaving me as I'm saying it. So it's like when we have, yeah, now I remember. It's mostly on buys I know how to do too. We have like strong movement, strong movement. All of a sudden, we have field high, field high. You come back, take this range low. Sometimes they even take the second one safe. That is the main one that started that movement, that owns this whole retracement. To come back, take the liquidity, drive upward. And sometimes to even make it even better, to come back, take the breaker block there. That's the same example I showed you guys on gold. I was trying to use to teach you guys ranges where you guys did not understand me. Now, what has happened here is they've used this original range as liquidity. Let me mark it up well. So we have range low, field high. Field high does not have, it also has a field low. Now that field low, we'll count it more as, so some people trade this as, depending on the time frame, they trade it more as, what do you call this shit again? As engineered liquidity. That's why you see them catching the entries here. And then depending on time frame again, let's just say this thing was a weekly FVG because sometimes because of this arrangement, we have a weekly FVG here, you have higher chances of them coming down here to take this liquidity here and continue. So on 1 week now, we might see weekly FVG or daily, you can see a daily FVG under here. That's when you now see a reaction like this, and then buyers will now come from that zone and continue. If it's not understandable for you now, if you put in more practice, you understand it. This is just a trading pattern. So somebody said that the failure swing at that range that he was calling a strong guy is a yes, it's not a valid. No, I don't rephrase your question. He said that the failure swing at that range, there was failure swing in one range, this thing here or this one I drew. Failure swing at that I was calling a strong high. This is where you're calling a strong high. Rephrase your question. I don't get what you mean by I don't know what you mean by yes. He said the failure swing at that range he was calling a strong high isn't a valid liquidity point. There was no failure. Yeah, you can use your mic.
Can you hear me, sir?
Yeah, yeah.
All right. Good evening, sir. Thank you so much for your time and devotion. My question is in respect to this particular um range that we're trying to treat that I was calling a strong high, which was not supposed to be swept, right?
It's liquidity.
That was later induced. Yeah, I'm saying um there's this swing point that is very close to it after the high was formed, you understand, by
I think you can draw
mitigating
something on
from
my
the
screen.
previous.
Can you hear me? You can draw something.
Yes, I can hear you. All right. Can you come adjust the screen a little bit down so I could properly annotate?
Um, hold on, let me turn it off. So you can do it on your own accord. Like you can
Yes,
draw.
I believe so. I believe so. All right. Um, all right. So I was seeing this point as the liquidity that was grabbed by this. All right.
Huh?
Making I was seeing this
Yeah.
point as the liquidity, yes, as the liquidity that was grabbed by this high, all
Okay.
right, before the breakdown. And I was
Stop,
seeing
stop,
this
stop, stop,
as
stop,
the inducement
stop,
created.
stop, 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 stop.
Okay, sorry, sir.
You see, that's the thing I was talking about. That's why you need ranges to really properly understand it. Do you get? You're
Yes, sir.
trying to look for the liquidity. Liquidity is everywhere. Focus on the range. That's why in all that thing I was trying to explain to you, I was talking about how this zone now did not make any of these lows a proper range. The range was only this high and this low. Look at what happened. This is the one protected high, not even this guy. Do you get? One protected high and then the continuation low. Retracement high and then low. Now, remember, before they did this thing, I said this is supposed to be the high, the main range high. I now said, now see, you can see how all these things is all about what you just said. You thought this was the liquidity, this was the draw. Yes, it's the liquidity taken for now. Do you understand? But when they now broke this low, this was meant to be the main high, and this is meant to be the main low. Where is that to? This is meant to be the main low here, right? But do you now know the flaw? The flaw here is that you think this is liquidity, right? And I said, that is not liquidity. That is not the liquidity. The liquidity is this double top. Why is it a double top? Now, let's mark a liquidity. Let's go to a lower time frame. Let's just go to 30 minutes or so. Why is it the one that's liquidity? Let's keep it in simple terms. They broke this high. Inside all these things they did here, that thing your counter liquidity should have at least broken. Do you know if they had done at least this thing? Let me draw it. If they had just done something like broken this low and then retraced and then dropped like this, then I would have considered using that zone as liquidity. Even if it failed, it should have counted as something. Do you get? But in this situation where they left a double top, left a double bottom too. Do you understand me now? They left a double bottom, left a double top. When they cleared this low, they also had to clear this high. Do you understand? You can unmute yourself and answer the question. If you
Yes, I'm following. I'm following.
Yes.
Although, to be honest, my network is shitty right now, but I don't want to mess up the session. I'll still go through the recording.
Yeah. So the thing here is that liquidity you're looking for has switched from normal inducement. Since there was no availability of inducement here, it has now moved to range liquidity because the overall proper range that is pre-existing, like the main strong range, is this high and this low. This is the first range. So everything here is made, it's just like let's put it like this, let's put it in names. All these zones have given themselves a name, they've given themselves a form, they've given themselves an idea, they've given themselves a level, right? This one is trying to make a level for itself. And until now, when it has broken this structure here, it has not made any level for itself. I don't know if you understand. Until this low has been broken, it has not made any level for itself. So it's this, let's put that, this one now has made a name for itself. So let's do something to mark it. Hey, what's the name of that tool? I'm looking for a particular tool. Am I recording this thing? Does anybody know if I'm recording this thing? Okay, it's recording. Let's use this progression trend. This one has made a name for itself easily. Now, the new problem here is which one of them will make a name for itself. This one tried making a name for itself by breaking its structure, but inability of an inducement has made it being overthrown. So this one has taken this one's name. This is the new one that has a name for itself from this high to this breakpoint. That is the new name that exists in this zone. So this guy is not a strong high. What made it not a strong high? He did not have prior. It's just like what makes another block a strong other block. Inducements. You need inducement prior to the other block. And you can see 10,000 other blocks. You can see 10,000 FVGs, but the one that is induced or on a strong zone or on a breaker block or that is properly mitigated or whatever is the main other block. See, that's why I said don't use ranges as the overall theory. Use it as the aid that needs to be a part of that theory. Do you understand? All this thing could have been something great. But because he doesn't have a proper inducement to support his overall range, it's just like, in fact, let's throw away ranges right now on this guy. No range here. Why would any other block here hold when none of these zones had inducement? There was no good inducement here. All these other blocks mitigated themselves. Can't you see it? Here mitigated itself. Here mitigated itself. This is the only one that was not mitigated itself. But see, no inducement. They tried reacting. They opened up again, cleaned it off. Everything here became liquid. So even without the idea of ranges, this high here had no business holding because no strong other block to support it. It turned into liquidity. And then this high became the stronger range. In fact, this high itself became stronger than these other two highs here. I mean, this one here became stronger than this one because this one at least is swept something. This one now has become stronger than this whole overall. So where does the new range now start? Yeah, this high and this low. Okay, I even call this low safe. I even say that this low is not here safe. We don't leave it like that. Main thing is that all these things now becomes that consolidation thing I was telling you guys about that. It's not looking like it's just existing inside of this top and bottom. All of this is now trash. Everything that happened here is just trash. Only thing is, yes, if you made money here, good. But if you held on without your stop loss being wide enough, you would have been taken out because there's no liquidity to continue from this point. And that's the thing about manipulation. That's the thing about the market. It will always be a form of manipulation. So if you were hoping for this place to be held, that's why you now have to now have that range. That's why I always use range. I always use range. So you have to understand the breaks of structures involved and everything. So if you're watching all these videos I draw, that's why when people were saying nothing about not understanding what I was saying, I understood that yes, I was talking fast, but you want it to happen fast. If you calm down, you'd actually see that all these things are actually easy. It's just how you approach it and how serious you want it to work for you. I'm assuming you want to give Riley mic. I don't use like 30 minutes inside him. And he hasn't touched. Well, liquidity isn't a long concept. So now, this is where we're at in the market. And for me, if I wanted to buy, although yeah, we have a good reaction from here, and G is one of those pairs that can be very stupid. You can just buy from anywhere, and you'll be waiting for them at your external point. And you can even see that they even reacted from FVG. I was looking at this zone, but I'm really, really honest. Where I want to see them buy from isn't here. Because this thing isn't an inducement for the full range. I want to see them buy from either this down here or even after sweeping somewhere like here. This zone. Anyone that comes first. If it's something like this sweep, I can enter it on risk entry. I can take it on risk entry. So yeah, that's basically what you have on range and structure. Before I give Riley the mic, were we able to follow up? I'll send all the videos from my own end um to the Telegram group. So I just asked a question. If anybody understood or is not understanding or anything, send speak now. Speak now before I make him admit. Hello? I mean, nobody's hearing me. Did we understand? Yes or no? So that we can enter liquidity. There's not much time. Okay. So Riley will be our host for now. I'm not even ask Riley if he did it himself. So yeah, just make sure you keep watching the things. Rewatch them. All this is not it's not rocket science. You don't just learn, don't just overnight become like somebody else. Learn to be like somebody else. Just become your own version of it. Riley, anytime you're ready,
Okay.
like you're waiting for us.
Yeah. Okay. Can you guys hear me?
Me, I can hear you.
Almost. Okay. Okay.
Your
This
screen
network
is,
has been bad, Shabo. Is it showing?
yeah, your stuff is clear. Just
Okay. No
um,
problem.
so you're going to show us liquidity now, different types of liquidity, examples of liquidity. You already have it in your head now. You're going to do it now. Make I not disturb you.
Yeah.
Yeah. So for
While I know day for that answer.
eh?
I say while I know day.
Okay, you're using what pay are you using?
I'm using GBP JPY.
Oh, okay, okay. No, let me not distract. Let me keep quiet. I now. Just when you're done, so I'll be here.
Okay, no problem. Okay, guys. Good evening. So we talk about liquidity. Liquidity works hand in hand with ranges and structure. And if you can get the groundwork of liquidity settled, then you are golden. Okay, so there are different types of liquidity anyway. Hold on. Let me get this
Riley,
tool.
Riley. I don't know.
Yeah, can you hear me?
On my screen, I've never really shared a host before. So I'm recording on my own screen, but I don't know if the thing is also going to record yours or if you would have to start recording on your own. So on my screen here, it's written
Oh,
recording. Huh?
it's showing me that it's recording here.
Okay, so mine is recording on your screen too.
Yes, yes.
Okay, okay. No,
Okay. No, wahala now. So instead of wasting our time, because hey, Jamo don't chop our time, sha. Um, let us talk about the different types of liquidity. So there is, I believe Jamal even said it here. So there's like trendline liquidity, right? There's trendline liquidity. There are like the equal highs and equal lows, right? Sorry, and lows. Which one again? Okay. There's also the inducement liquidity. That's there. We have our swing highs or field highs, field lows. So let me just call them field highs instead of swing highs. That's field highs and lows, sorry. And there's also accumulation. What am I writing? Okay, accumulation. So yeah, these are different types of
he teaches you
liquidity.
guys nonsense. It's not
And
student though.
okay, there's no problem. Okay, the matter now is that I tried my best to subscribe to TradingView Premium, but my card wasn't like accepting. So we just manage with the basic stuff that we can do. So let's just use like this whole range here, this whole movement down, this downtrend, whatever. Anyway, liquidity is money. Simple as that. It's people's money in the market. And price going to different directions, price having its targeted highs or uptrends or downtrends, stuff like that, is just its own way of reacting to this liquidity. Price doesn't just move around for no particular reason. Has it's caused by okay, sorry. Ha. Jamo, you chop our time, 10 minutes more, okay. Okay, there's no problem with that. Let's just do as much as we can. Um, so as I was saying, it has its own targets and that moves it. So let's just use this whole downtrend now, for example. Hold on, let me go to like 1 hour time frame. I think that would be best. Okay. My network is low. Can you guys still hear me? Hey. Let not be that. Okay. You guys can hear me. No problem. Omo, this is messed up. Oh. Anyway, so let's continue. So you guys know how I said earlier that liquidity rock works hand in hand with ranges, right? Yeah. So as you find your range, you find out as well that within that range, liquidity has to rest. And if that range itself does not have liquidity, you will not, that is a failed range. Let me not use big grammar now. But me self, I'll confuse myself. So let's just start here now. So we have this range high. After all this price movement upward, right? We have this range high up here. Then, okay, there's a break of structure downward or a change of character, however. Then while this was created, right, we have this stupid high up here. Now people on lower time frame will think that okay, this is a new high because okay, on lower time frame, you see that there is that high, this low. Okay, this low was taken right here, right? That low was taken, so they'll be marking up places like this now, thinking that okay, those are break of structure to the downside, and since we're on a downtrend or we're causing a downtrend, this will be their high. Now they will be setting their limits around here. Yes, it will work out for them, fine. That it's sorry, it will work out for them at first that okay, it is going to sell, but that will be for a limited amount of time. All right, they will be probably targeting this low and they are going to be taken out. Why? They did not find out where exactly liquidity was resting within this whole range. And if you do not find out where liquidity is, you yourself will be the liquidity. So out of all this now, what price reacted to was probably the lower time frame high order block right here. I can't really go down to lower time frame to show you because of my subscription issue, but this week now represents our little order block. And what validated our order block here? Hold on, let me show you. Using the flip tool, we're going to just mark out this to this down here. We can clearly see that this week went into the 50%, giving us a good inducement for that order block to be used as a proper inducement, right? It gave us reason that, okay, we're going to use that as an inducement to sell. All right, hold on. Okay, so your stop loss, you can keep it above that high, you can keep whatever. But the matter is that we found out where exactly the whole inducement matter was in that range. So this was our range low. And now after the inducement was taken from here, there was a transfer of money. There's this thing called transfer of money. Anyway, this whole range from before doesn't matter now. Everything that now happens from this whole price reaction is what we now try to look for. All right. Now you can see all these movements, a lot of manipulation in lower time frame. This would have served as a very good entry. Why? There was build-up of liquidity. You can call this accumulation. I call this accumulation anyway, where you see a lot of price jargon, yeah. Something like, let me just use a box to do everything, right? So this range, these are range high. These are new range high from before. 5 more minutes. Wow. These are new range low. And we got a retracement into the 50% from that range high, right? Yeah, we got a retracement. So we can now say that we can be looking for entries around here or probably here. Anyhow. Well, the matter is that why this place was used was because of this build-up of liquidity around here. This build-up was now validated. This range high, whatever, was now validated by the sweep of liquidity or the break of structure to the downside, whichever you choose to call it. All right. Okay, it was validated by that, meaning that okay, since we have a break of structure, this is definitely going to be used. There's accumulation, meaning there are a lot of transactions, there are a lot of money that is being placed here. A lot of people are trying to sell. Someone was selling here, someone was selling here. A lot of people are selling, still trying to push down. And that means, okay, there's money here, right? Okay, we can take them out. We can now use their money to push ourselves. Price has to feed itself to continue. You understand? So that was used. I don't really see any need to draw, but I guess we can just draw it. So I don't know, right? Okay, so that was used as well. I'm not really going to go too far with it. I'm just trying to make you understand that liquidity is just everywhere in the market. There are different types, as I said before. There's the trendline liquidity, there is the inducement that you can also use your FIB tool to find out as well. There's the premium and discount pricing that you can use as your confirmation, like I just did, where price comes into discount, you understand? Like after 50%. I say sorry, not discount, premium. As if you're selling it's premium, if you are buying it's discount. Anyway, that's something for another day. Now, this FVG was used. Why was it used? Probably this, yeah, this was used as the inducement as well. It's a failed high. It doesn't have inducement. So this part of an example of the failed high, sorry, wrong tool. Just like Jamal showed you guys on his own chart, this is a failed high. Why is it a failed high? It has no inducement or it has no liquidity within itself. You understand? From that high to this low is the whole range. And this range does not have liquidity. So the high, since we are selling, will be used as liquidity. And any other POI, any other POI that is behind that will work as our, entry point. So we can use this doji candle or breaker block. It can serve as a breaker block on lower time frame. But anyway, that was used because okay, it's behind an FVG or in front of an anyone. That's another entry. So if you put into practice this liquidity concept, working with structure, working with ranges, working with liquidity, yeah, it's going to be it's going to be easier for you. A lot of people are saying, okay, there's another block here, right? It's not going to be a bad idea that okay, you're seeing other block, you're seeing a false liquidity, just that you should know the right one to use. They will be like, okay, this was another block, and this range here or this price movement here could have served as the inducement, while this break of structure to the downside will now serve as our confirmation for okay, we're going to sell here. People have sold here and will have been stopped out. Why? Because they failed to recognize the liquidity that was resting at this top here. Do you understand? So you can continue that downward. You can see that okay, I can't really say anything here. anyway, oh baby. There's also trendline liquidity. I wish I could show you here an example. Is there any example of trendline liquidity right now? Not really seeing anything. But I think I've covered most of the ones that I gave you example. Okay, I've covered inducement, I've covered field highs, I've covered accumulations. I'm trying to work with time. Okay, less than 1 minute. Wow. I don't know how we'll do this so that we can get examples for them though. Jamo, how are we going to do it now? Time has run out and I want to talk about trend line and equal highs. I don't know how we'll do that one. Can you still hear me? Can anyone hear me at all?
Yeah, I can hear you. So what you can do is just after this one, if you still want to talk about the remaining part, you can host again. Then I'll drop the link for them. Then you now continue.